Good day, I'm Hijaz Kastri with matriculation number 297515. Today, I'm excited to talk about Berjaya Land Berhad, a part of the Berjaya Corporation since 1990. This conglomerate excels in consumer marketing, financial services, and development, showcasing innovative strategy and a strong consumer focus. Under the leadership of a group, CEO Sheikh Ali Shahur Hamid, Berjaya Land Berhad have achieved internationally expansions and large impactful marketing campaigns. The company commitment goes beyond business. The vision to also be an organization which maximize the value human capital through empowerment, growth, and the commitment to excellence. All about the mission is strive to provide a cross-functional environment opportunity for professionals. For the notable project for the Berjaya Land, the tropical Bukit Jalil Lina resident Bukit Jalil. Recently, Berjaya Land received award for such a 2022 Real Estate Personality of the Year People Choice of the Award. This award are received and got by the Tan Sri Vincent Tan.
Good afternoon, Doctor. My name is Luis Kukaho, matrix number 299089, and I'll be introducing about Sunway Construction Group Berhad. Sunway Construction Group Berhad, also known as Suncon, is Malaysia's leading construction company. Founded in 1981, its parent company is Sunway Berhad. Suncon specializes in an area that allows it to become the largest pure-play construction company in Malaysia. Suncon's management is currently headed by Group Deputy Managing Director Eric Tan Chi Hin. Suncon has a plethora of core competencies, some examples of which include its construction services that consist of building and civil or infrastructure, geotechnical and foundation, mechanical, electrical, and plumbing, otherwise known as MEP. Besides that, Suncon is also competent in producing precast manufacturing and sales, as well as providing sustainable energy services. Some of Suncon's most notable projects include the Kajang Silk Highway, Legoland Malaysia, Kuala Lumpur Convention Centre, and the BRT Sunway Line, which is Malaysia's first elevated bus rapid transit system. Suncon's vision is to be a leading regional construction and engineering group. Meanwhile, Suncon's mission is innovating to deliver value underpins our relentless efforts to drive positive and sustainable change in the way we work and operate to create value for all our stakeholders. As of 2023, Suncon has a global presence in the field of construction with expansions to the international markets of Singapore, India, the Middle East, Myanmar, and the Caribbean. Suncon has also received awards such as the Contractor of the Year in 2019 and Builder of the Year 3 times in 2003, 2005, and 2013. Suncon also has distinguished recognition in industry performance, management, safety, health, and
Good afternoon, Doctor. My name is Wong Javi, matrix number 292365, and I will be presenting on the activities ratios. Activity ratios is a matrix used to determine the efficiency of the organization in utilizing its asset for generating cash and revenue. Under activity ratios is composed of two different ratios, which are total asset turnover and also account receivable turnover. While the total asset turnover is the metrics used to measure the efficiency with which a company uses its asset to produce sales, while the account receivable turnover is the frequency a company collects money from their account receivable balance. I'll first start with the total asset turnover for Berjaya Land Berhad. The formula for calculating total asset turnover is net sales divided by average total asset. Berjaya Land Berhad has the net sales of 7,269,652,000, whilst beginning asset for Berjaya Land Berhad is 14,511,650,000. For the ending asset of Berjaya Land Berhad is 13,091,014,000. Total asset turnover for Berjaya Land Berhad is 0.53 to 1. In short, Berjaya Land Berhad has generated a sales of 53 cents for each 1 ringgit of total asset. To continue with the total asset turnover for Sunway Construction Group Berhad, Sunway Construction Group Berhad has the net sales of 2,155,231,000 with the beginning asset of 2,236,048,000. With the ending asset of 1,864,215,000. The total asset turnover for Sunway Construction Group Berhad is 1.05 to 1. In short, Sunway Construction Group Berhad has generated a sales of 1 ringgit and 5 cents for each 1 ringgit of total asset. By comparing the total asset turnover for both Berjaya Land Berhad and also Sunway Construction Group Berhad, Sunway Construction Group Berhad show a better total asset turnover than Berjaya Land Berhad. Berjaya Land Berhad are advised to improve their project management process so that they can complete a construction project quicker and more accurate to increase their total asset turnover, while Sunway Construction Group Berhad are advised to regularly optimize their equipment utilization to maintain their high total asset turnover. While the formula for calculating the account receivable turnover is net sales divided by average account receivable. Berjaya Land Berhad has the net sales of 7,269,652,000 with the beginning account receivable of 401,241,000 and the ending account receivable of 335,820,000. The account receivable turnover for Berjaya Land Berhad is 19.73 times. In short, Berjaya Land Berhad collects money from their account receivable for 20 times within a year. Moving on to the account receivable turnover for Sunway Construction Group Berhad. Sunway Construction Group Berhad has the net sales of 7,269,652,000 with the beginning account receivable of 677,726,000 and the ending account receivable of 600,607,000. Account receivable turnover for Sunway Construction Group Berhad is 3.37 times. In short, Sunway Construction Group Berhad collects money from their account receivable for 4 times within a year. By comparing the account receivable turnover for both Berjaya Land Berhad and also Sunway Construction Group Berhad, Berjaya Land Berhad shows a higher account receivable turnover than Sunway Construction Group Berhad. Berjaya Land Berhad are advised to implement transparent communication and flexible payment option to maintain their high account receivable turnover, while Sunway Construction Group Berhad are advised to tighten their credit policies and shorten payment terms to increase their account receivable turnover.
Good evening, Professor. My name is Pauline Tan Kayen and my metric number is 298787. I will be presenting about the ratios of company. The liquidity ratio is a type of financial ratio that is used to determine a company's ability to pay off its short-term debt obligations. Liquidity ratio consists of a current ratio and quick ratio. The current ratio is also known as a capital ratio. It measures a company's ability to cover its short-term liabilities with its short-term assets. It is calculated by dividing a company's current asset by its current liabilities. The quick ratio is also known as asset test ratio. It is a more stringent measure of a company's liquidity than the current ratio. It excludes inventory from current assets because inventory may not be as quickly converted to cash in case of financial need. We will first look at the current ratio of Berjaya Land Berhad. Berjaya Land Berhad has current assets of 3,952,178,000. Their current liabilities is 3,893,511,000. They have the current ratio of 1.02 to 1, suggesting that the company has just enough of current asset to cover its current liabilities. This ratio indicates a relatively tight liquidity position, raising concerns about the company's ability to meet short-term obligations comfortably. Let's look at Sunway Construction's current ratio. Sunway Construction has current asset of 1,637,362,000. Its current liabilities is 1,103,329,000. Its current ratio of 1.48 indicates a healthier liquidity position compared to Berjaya Land. With a ratio of above 1.0, Sunway Construction is more capable of covering its short-term liabilities. They have a more robust financial position in the short term, allowing them to meet immediate financial needs. In order for Berjaya Land Berhad to increase their current ratio, they are advised to either manage their inventory more efficiently or decrease current liabilities by paying off their short-term debts to improve their short-term liquidity. While Sunway Construction Group Berhad are advised to maintain their high current ratio by balancing their current assets and liabilities effectively. This is to strengthen their ability to meet short-term obligations. Next, we will look at quick ratio. The quick ratio of Berjaya Land is 0.77. Their current assets is 3,952,178. Their inventories is 1,060,445,000, whereas their liabilities is 3,893,511,000. With quick ratio of 0.77, the company may face challenges in covering its immediate obligation with its most liquid assets because their ratio falls below 1. For Sunway Construction Group Berhad, their current asset is 1,637,362,000. Their inventories is 53,622,000, whereas their current liabilities is 1,103,329,000. This gives them the quick ratio of 1.44, which means that they are in a healthier liquidity position, surpassing the threshold of 1. This also implies that Sunway Construction has a more substantial pool of highly liquid assets, excluding the inventory, to cover its short-term liability. Berjaya Land Berhad are advised to either collect their account receivable more promptly or to pay off their short-term debts to enhance their short-term liquidity without relying on the slower to liquidate assets like inventory. While Sunway Construction Group Berhad are advised to manage their liquid asset effectively while keeping short-term liability in check.
Hi, my name is Baron Lim Isiu, metric number 299010. I'm going to present about profitability ratio. Profitability ratios are used to measure the ability of a company to generate profit. Examples of profitability ratios are profit margin on sales and return on common shareholders' equity. Profit margin on sales measure the amount of profit that makes on sales of product or service after all costs related to the items are accounted for, while return on common shareholders' equity is the rate of profits earned on the amount invested by the common shareholders. First, we calculate the profit margin on sales of Berjaya Land Berhad. The formula to calculate profit margin on sales is net income divided by net sales. The net income of Berjaya Land Berhad is 237,258,000, while the net sales of Berjaya Land Berhad is 7,269,652,000. The The profit margin on sales of Berjaya Berhad is 0.032621. In short, Berjaya Berhad generates 0.0326 profit from every 1 ringgit of sales. Next is profit margin on sales of Sunway Construction Group Berhad. The net income of Sunway Construction Group Berhad is 129,785,000, while the net sales of Sunway Construction Group Berhad is 2,155,231,000. The profit margin on sales is 0.060221. In short, Sunway Construction Group Berhad generates 0.0602 profit from every 1 ringgit of sales. By comparing the profit margin on sales of both company, Berjaya Berhad and Sunway Construction Group Berhad, Sunway Construction Group Berhad has higher profit margin on sales. This means that Sunway Construction Group Berhad generate profit more than Berjaya Berhad. Berjaya Berhad is advised to do strategic cost management, which they can do. They can regularly review their supply chain and negotiate contracts with suppliers to secure better rates. While Sunway Construction Group Berhad is advised to do cost control. They can regularly review and analyze the operational costs. Next, we calculate the return on common shareholders' equity. To calculate return on common shareholders' equity, the formula is net income minus preferred dividends and divided by average common shareholders' equity. The net income of Berjaya Berhad is 237,258,000. The preferred dividends of Berjaya Berhad is 0, while the average common shareholders' equity is 162,183,500. The return on common shareholders' equity of Berjaya Berhad is 146.2%. In short, Berjaya Berhad achieved 146.2% of return on common shareholders' equity. Moving on to return on common shareholders' equity of Sunway Construction Group Berhad. The net income of Sunway Construction Group Berhad is 129,785,000. The preferred dividends is 0. The average common shareholders' equity is 52,011,500. The return on common shareholders' equity of Sunway Construction Group Berhad is 249.5%. In short, Sunway Construction Group Berhad achieved impressive 249.5% return on common shareholders' equity. By comparing the return on common shareholders of both Berjaya Berhad and Sunway Construction Group Berhad companies, Sunway Construction Group Berhad has higher percentage of return on common shareholders' equity. This means that Sunway Construction has higher rate of profits earned on the amount invested by the common shareholders. For Berjaya Berhad, the innovation is the key. They should invest in research and development to create innovative products or services to attract more customers and gain more profit. For Sunway Construction Group Berhad, they should utilize their assets. They have to optimize the use of assets to generate more revenue.
Leverage ratio is aid to the determining the proportion of a company financings that derive from the debt as well as its ability to manage the debt. Debt to asset ratio is financial metric used to help understand the degree to which of company operation are funded by debts. Debt to equity ratio. This ratio compare a company total debts to equity of each share. Debt to asset ratio is the total liability divided by total assets. So the total liability for Berjaya Berhad is 8,527,959,000. For their total asset is 14,511,650,000. The ratio of the total debt to assets is 0.5877 equal to 1. For every Rn 1 ringgit of liability, Berjaya Berhad incurs Rn 0.59 cents in debt. For the debt to asset ratio for the Sunway Construction Group Berhad is total liability divided by total assets. Their total liability is 1,450,254,000. For their total assets is 2,236,048,000. The ratio of the debt to assets is 0.6329 equal 1. Sunway Construction Group Berhad generates Rn 0.63 in debt for every Rn 1 ringgit in liability. As compared for the debt to asset ratio, that Sunway Construction Group Berhad have a good in a debt to asset ratio which is a 0.63 equal 1. Then Berjaya Berhad is a 0.59 equal 1. So what they should do for the Sunway Construction Group Berhad is prioritize paying off debt, especially those with a high interest rate, enhance the utilization of existing assets to increase their productivity and value. For the Berjaya Berhad is focused on reducing high interest or non-strategic debts, conduct a thorough review of the total liability divided by total equity. For Berjaya Berhad is 8,527,959,000. The total equity is 5,983,691,000. So the ratio for the debt equity is 1.432 equal 1. For every Rn 1 ringgit in on equity, Berjaya Berhad has generated Rn 1.43 in Group Berhad. Total liability divided by total equity. Their total liability 1,450,254,000. For their total equity 820,794,000. Ratio for the debt equity is 1.72 to equal to 1. For every Rn 1 ringgit in owner equity, Sunway Construction Group Berhad has generated Rn 1.72. The conclusion, as Berjaya Berhad to into the Sunway Construction Group Berhad, as the Berjaya Berhad generate for 1.43 equal 1, then Sunway Construction 1.72 equal 1. For the Berjaya Berhad, we can focus on reducing overall debt level, particularly high interest loan. For the Sunway Construction, regularly review.
In conclusion, Suncon has more ability to convert assets into cash and pay its short-term debt obligations compared to Berjaya. The liquidity ratios for Suncon are both higher than Berjaya. In terms of activity ratio, Suncon is more efficient in converting assets into revenue, but Berjaya is more efficient in collecting money from receivables. If you look into profitability ratios, Suncon is more efficient in controlling all costs relating to sales, as well as proficient in generating profits, so that the shareholders can get the return of investment on equity faster compared to Berjaya Land. Nevertheless, Suncon has a higher debt to equity and debt to asset ratio compared to Berjaya Land. This reflects a potential higher financial risk due to increased reliance on debt, but also provides an opportunity for higher returns on equity if debt is efficiently managed. Suncon has a possible strategic use of debt for future growth and expansion.